What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we had a very rare occurrence. That's right, we printed a red candlestick. We did see the S&P 500 and the NASDAQ 100 hitting my price targets, and we did get some selling at those levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did go down 0.34%. And we did tag that price target just above at $413.80. That did finally trigger some selling, and we finally did see a red candlestick after all of these green candlesticks. Remember that I said just last night that once a pattern becomes this obvious that the price action continues to close over the open price, that's usually a sign that that trend is starting to end just as everybody is catching on to it. So we finally did see a closing price below the open, and we did close just above the 5 EMA. So don't forget, we're still in a very strong bull trend, but now that we've seen selling after we've gotten to one of these critical price targets, it does increase the chance that we're going to see a few days of selling, which is just a cool down and a pullback. We are way too extended and this selling is way overdue, so it's really not going to be surprising to see some selling going into the end of the week. Now don't forget, the risk is still defined way down here at the gap close, which is still right around $400. We also do have a little bit of a pivot and support trend line, which we could find support at, which is right around 402. Now, as far as price targets go, we did not find resistance at that previous price target at $410, so I'm not really expecting to see that level acting as a strong support level. The stronger support levels are most likely going to be right around the 13 EMA around $405 or the top of this gap around 403.50. If these levels fail to hold up as support, don't forget we have the gap close at $400 and the 20 simple moving average is also at $400. It's very possible we come back to the mean because we did get too far overextended. It's like stretching a rubber band, and when you let go, it's going to snap back to its nominal position. So that 20 simple moving average is very important to pay attention to, and I don't think it's a coincidence that the 20 simple moving average is about to come into the bottom of that gap. So if we fail to find support at the 13 EMA, just right around 406, that means we're more than likely going to close the gap, or at least attempt to close the gap all the way down here at $400. So downside risk is still defined by this gap, and from today's close, that's still a drop of about another 2.6%. Now I still do think this market is bullish, and I do think this market wants to go higher, and we still are in a bull trend in a bull market. So this is more than likely going to be a buy the dip scenario, which means there's a possibility we don't need to see a very big pullback before we continue to go higher towards our next price targets. Remember, we don't care about any price targets above 413.80 until we get a close above that level. We need to break an existing price target before we look for the next price target above. So right now, it's possible that $413.80 was the top in this market, and that's the level we want to pay very close attention to for resistance. If we do break above that level, then we can start talking about 417 and the level above in the 420s. So remember, possible downside support is going to be the 5 EMA at 410, which is unlikely to hold up if we continue to see selling going into tomorrow. The 13 EMA right around 406, the top of the gap at 403, and the bottom of the gap at 400. My general rule of thumb for a sell-off like this after we got so far extended is generally expect the sell-off to last for at least 2 to 3 days. So that means going into tomorrow, you don't want to be overly bullish until we see where the bottom is going to be. Consider this the beginning of a falling knife, and we have no idea how far that knife is going to fall. So if you're buying too soon, just understand that you're taking on unnecessary risk, and you need to make sure that you still have an exit strategy. Next up on the NASDAQ 100 triple Qs, we see a little more selling today, going down 1.2%. We also did close back above the 5 EMA still, and we did close that gap that we opened up yesterday. We're still in a very strong bull trend, but our risk is defined by more than one gap. We have a gap at 332, a gap at 325, and yet another gap at 321. The 20 simple moving average is now right around 324, so it's more than likely we would not come down to 321, but we would find support above that level right around 325. Also note that we got right into the 341 range before the selling triggered, so that does mean that we did satisfy that price target. Just like when the S&P 500 met its price target at $413, we saw the triple Qs getting up to 341. When we get that sort of confluence in the market where multiple indices are meeting their price targets, it does increase the probability that we could see selling like this. So from today's close to these critical support levels that we need to watch, we could have as much as about a 3.5% drop. The level that I'm paying the closest attention to going into the rest of the week is going to be right around $330. Before we get there though, we do need to see a decisive break down below 334. To get to 334, we need to drop about 0.75%, and there is a gap close around 332, which means we need to drop a little more over 1% to close that gap. So critical support levels are going to be 334, 332, and 330. If we break below 330, there's almost no doubt in my mind that we're going to come down to 325 and close that gap in a flash. So just like I said with the S&P 500, consider this a falling knife, and our risk is defined at one of these levels, and we need to see the price action bounce off of one of these levels to confirm that it is acting as support. So the 2 to 3 day rule applies as we continue to see selling going into tomorrow, and it is also possible this was just a one-day event and we continue to start going back higher. That's unlikely considering the fact that we're overextended and we really don't have any well-defined support levels below. More than likely the bears are going to be in full control for a couple of days until the bulls can find a support level and reverse this selling. Remember that we need a break and close above 341 on the triple Qs before we're looking up to the next price target at 350. So a nice healthy pullback would be completely normal and completely expected before we continue that hike back up towards new all-time highs. On the Dow Jones, we almost closed at a brand new all-time high today, but we gave back some of the gains near the end. But we did see the Dow Jones in the green today, closing up 0.22%. Remember, we continue to close over the previous all-time high right around 337, which increases the likelihood we're going to the next price target above at 341. Also note we're very close to the previous price target around 337, and we haven't gotten decisive breaks and closes over that level. So it is possible we're correcting through time and we're going to hang around 337 before we see any selling in the Dow. Our downside risk on the Dow is going to be defined at our previous all-time high level at 336. The gap closes at 335 and $332. Also note the 20 simple moving average is right at that gap close as well. And it is possible if we do see continued selling that we do retest these 20 simple moving averages. On the Russell 2000, we had a green day today going up about 1% and closing back above all the moving averages. We still don't have a defined bullish trend just yet, but the price action is starting to look bullish. You can see the Russell 2000 did try to get a bull breakout from this resistance trend line, but it did give back all those gains and close back within the trend line. So we still don't have a decisive breakout and we still don't have a bullish trend. As long as the price action can stay above $219, it is possible that eventually the Russell 2000 could break to the bull side. But it's also possible we break below 219 and continue a bearish trend. So don't get overly bullish on the Russell 2000, especially if we continue to see selling in the rest of the stock market. That failure to close with a bullish breakout was not a bullish sign, but we will have another attempt at that level again tomorrow. Upside resistance is still that breakout level around 223, and our resistance levels are at 227 and 233. Downside support is 219, and then it's going to be 210 and 205. On the ARKK ETF, we closed back below the 50 EMA yet again, going down over 2% today. The ARKK ETF continues to struggle, and it's really having issues getting back above the 50 EMA. We got to close above that level yesterday, and it looked like we were getting ready to run, and then the ARKK ETF gave all the gains back, and it did find support right on top of that 5 EMA. So upside resistance is going to be at 50 EMA yet again at 126, and we'll also have resistance around 133 and 139. Don't forget about the gap close, which is all the way up here at $143. So there is lots of potential upside in the ARKK ETFs, but we need to see the price action and the trend confirming the upward move. The downside support levels I want you to pay attention to are right around the 20 simple moving average at 121, the gap fill at 115, and the support trend line right around 112. On the VIX, which is our fear indicator, we see the VIX going up about 2% today, closing right around 17. We're still trading below 18.2, so this is still a low fear environment. However, the VIX can spike very quickly, and you can look backwards on this chart and see how quickly the VIX can actually spike in any given day. So treat this sell-off that we saw today with the respect that it deserves, and watch the VIX very closely. If we see the VIX spiking back above 18 and getting into the 20s, this could turn into a bigger wave of selling and we could go through a stock market correction. But as long as the VIX is staying below 20, this is really just a normal pullback, which is completely healthy in any bull market, especially after we get too far extended to the upside. On gold, we dropped about 0.5% today, and we did find support right on top of the 20 simple moving average. I'm still looking for gold to retest the 50 EMA at 1757 and retest our price targets at 1761. We need to break above 761 to retest the next price target at 1776. If we break down below the 20 simple moving average, we're likely going to retest support down here at 1686. On silver, we did close in the green today, and we're getting very close to retesting the 50 EMA at 2560. If we can break back above the 50 EMA, we're looking to get back up to our price target at 2650. Downside support is going to be $25, and a break and close below support means we could be heading back down to 2350. On Bitcoin, we're currently trading a little bit down, a little over 1.4%, but we did hit that price target at 64,000. Whether or not that's triggering the resistance and the selling is to be determined, but if we do break and close over 64,000, we will have the next price targets up here at 67,800 and $70,000. Remember that Bitcoin is very far extended on monthly charts, so it's getting more and more unlikely that we're going to continue to get up to these next price targets. So wait for a decisive close above 64,000, and even then, just understand that your risk to reward ratios are not stacked to the bull side. There is a lot more potential downside than there is potential upside in Bitcoin, so just understand your risk. If you don't know what I'm talking about, check out my Sunday videos where I talk about Bitcoin at a macro level view, and you will see just how far extended it really is. However, we'll give benefit of the doubt to the Bitcoin bulls because we still have bullish price action with a bullish trend, and we did get a confirmation bullish breakout of this consolidation wedge. We're looking at possible downside support now right around the breakout level at 59,000, but remember, if we break below the 50 EMA, which is now right around 55,000, that will trigger the Bitcoin correction, which could lead to a flash crash. On Amazon, we dropped about 2% today, but it's really not a surprise after this monster bullish run. It was very unlikely that we were going to break above the 34.42 price target because that was going to be a very strong resistance level, and Amazon was getting up to that level at the same time that it was getting too far extended, which means it's running out of gas. You can see we're back within the resistance trend line, so for now, we have to assume that that was a false breakout, and we're coming back to retest support at 32.97. If 32.97 doesn't hold up, we're looking for possible support at the previous breakout around 32.60, and if that level fails to hold up, we're looking for 32.20. You can see the 20 simple moving average is getting very close to crossing back above the 50 EMA, which does mean that Amazon could be likely going back into a bull market, and this could be a buy the dip opportunity for Amazon's next run up towards that price target at 34.42. So overall, I'm still bullish on Amazon, but it needs to cool down, and it could be in that 2 to 3 day sell-off zone before we see buyers stepping back in. On Tesla, we got up to that resistance trendline level and got rejected almost perfectly, which was right around $780. We blasted right back down through that resistance level, which did not act as support, which was right around 762. We now have downside support levels that we need to watch around 718, the gap close at 705, the 50 EMA at 694, and the 20 simple moving averages all the way down here at 671. So the bulls do have plenty of support below, and they can continue to try to build on this bullish trend and get Tesla to break out of this resistance level and go back into a bull market. We are seeing the moving averages making some bullish progress, and they are starting to slowly but surely stack to the bull side. We still need to get that 20 simple moving average across back above the 50 EMA, so we need to see Tesla's price action staying above about $694 to stay productive in getting Tesla going back into a bull market. The next upside price targets are going to be the resistance breakout at 776 and the price target above at 802. On Apple stock, we dropped about 1.79% today, and we broke back down below that resistance level at 134. That was a nice price target to take profits at, and now we're currently trading on top of the 5 EMA around 132. Downside support levels are going to be 130, the gap close at 128, and the 50 EMA is down here around 126. We have another level right around 127, and the 50 EMA is getting very close to coming into that level. We don't have the 20 simple moving average back above the 50 EMA just yet, so we don't have a full bullish trend just yet. But Apple's price action is looking really good, and it's not surprising to see a little bit of selling after a monster bullish run like this. So I'm still looking for Apple to possibly come up and retest the daily higher highs, which are right around 137. It's possible we come down and close this gap before we do that, so make sure you understand your risk is defined by the gap below at 128. On the financial sector, we went up 0.60% today, closing back above the 5 EMA and still maintaining this bullish trend. On the industrials, we closed up 0.13% today, holding up above the 5 EMA and still maintaining a strong bull trend. On the healthcare sector, we were flat on the day, but still closing above the 5 EMA and still maintaining this bullish trend. On the energy sector, we got a nice confirmation bounce off of that 50 EMA today, but we did find resistance right around that 20 simple moving average. We need to see the energy sector get back above the 20 simple moving average, and we'll be very close to having all of these moving averages going back to the bull side, and the energy sector can go back into a bull run. So going back to the S&P 500, you can still see that we have bullish sectors, and we still have a very low VIX, which means we have low fear in this market. It's more than likely this is going to be a 2 to 3 day sell-off, which is a pullback, and it's completely normal in all bull markets. Treat it like a falling knife and give this selling the respect that it deserves, because selling can always pick up momentum, and you don't want to make any assumptions about where we're going to find support. So watch the critical support levels I gave you very closely and wait for the price action to confirm that that level is going to act as support, and you'll know that because you will see a bounce off that level. If you're buying at support, you know that your risk is defined at that support level, and you could set a stop loss at some percent below where you're buying. Don't buy blindly and make sure you're following the price action very closely. Remember, on the Stocks Channel Discord, I'm giving intraday updates throughout the day to help you navigate this market and stay on the right side of the trade. I'm also bringing new trade ideas weekly, and they're doing very well. If you're interested in the Stocks Channel Discord community, you can find out how to join by clicking on the link in the description of the video. Next up, let's check in on our trade idea Shopify, and we see Shopify going down about 5% today, but finding support right on top of that 5 EMA. Just like almost everything else in the stock market, we saw some pulling back and we saw some profit taking, and it's very important to watch these critical support levels on these stocks. We see the 50 EMA did hold up today, but we will test that level yet again tomorrow. So watch the 50 EMA at 1177, and if we break down below there, the next critical levels are going to be the 20 simple moving average at 1143. A break below the 20 simple moving average means all of these support levels below are back in action, and we're going to be looking for 1113, 1079, and 1035. It's very unlikely we're going back to 1035, and it's also very unlikely we're going to break below the 20 simple moving average if Shopify is going back into a bull market. So don't make any overly bearish assumptions and watch the price action at these levels very closely. Upside resistance is now going to be 1204 and 1260. Keep in mind that Shopify is still trading above the 50 EMA, and it's slowly but surely building up a bullish trend. And the next best buying opportunity could be trying to buy it off of the support level at the 20 simple moving average around 1143. So remember to be patient during the selling and watch the price action at the critical support levels very closely. Thanks for watching, everybody, and as always, I will see you in the next episode.